Hey everyone, this is Julian from the Binary Lab, and today I'm going to be talking about when to trade the trend and when to trade counter trend. So if you're trading either Forex or binary options, you're probably going to find this video useful to you. And on this chart, oh, by the way, yes, if you're trading Forex, you're looking for MT4 platform, did you know that you can actually get 30 US dollars into your account without any deposit required if you just click on the link in the video description from xm.com. Alright, so I have a special link for you to get a promo from XM Broker, which allows you to get 30 USD into your account as soon as you verify your account. How cool is that, right? Alright, on to this video, I'm going to quickly talk about the stuff that I have on my chart. So this is a pound USD chart, the M1 chart, and I'm illustrating to you what's happening right now. I have a couple of indicators to you. I'm going to quickly outline to you. The green is a MA55. The purple is a 100, and the gold is a 200. And then obviously the red and yellows are a much shorter period to generate like crisscross signals. Okay, so when everything's lining up beneath, like one beneath the other, like we have this on top, this followed by the gold 200, the 100, the 55, and then followed by the short period ones, and you know we have a downtrend. So when is it wise to trade an up? When is it wise to trade a trend, and when is it wise to trade a counter trend? Well, it is only probably wise to trade a counter trend inside of a range. Okay. Other than that, let's say, would it be wise at all to trade this bottom? Well, would you go counter trend on this? It depends. Why do I say it depends? Is because you really have to go out larger time frames and see what kind of supports there are available. So if you have support resistances around, for example, like I'm going out to the M5 and the 15, and I see that this is a very obvious support right there beneath. So that's something that I will look at, but apart from that, I cannot really see anything in the immediate vicinity that I would want to consider support resistance. So this bottom here doesn't link with anywhere else. The most recent bottom that it might link with would be here, the very most, but it's gone beyond that. So when it is doing something like that, I would say exactly, right? This is happening in real time before your eyes, is going from one support to the next. And that's what it typically does. It would tend to go from one support to the next, because if it doesn't close at, if it closes at here, we may get a reversal back up above here if it closes at this line. But the fact that it's closed beneath that line, over the next minutes, you're going to see. And despite the fact that I have a reversal indicator right here, it doesn't mean that it's going to reverse. Simply because you need to understand what I described in my last video. So in my last video, if you go on my channel, is the one about the stuff that I learned at the XM training seminar about behavior finance. So I spoke for about half an hour on that video to give you many of the powerful insights that I gained at that event, and one of the powerful takeaways is by it was a quote that was shared to me. This quote was by the trader and the book author Alex Elder, and he said that the market ranges are really like when a tennis ball gets caught bouncing between a floor and a ceiling. So what that means is that imagine if something dropped from a height at an angle, okay, and instead of going right down to the ground, it went into someone's house. And for the height that it came from, it then bounces between floor and ceiling, floor and ceiling, floor and ceiling, floor and ceiling, and what you eventually get is that it goes between floor and ceiling for a period of time, and it is only upon leaving that it resumes its free fall direction down. And like I said, down. So what I said from here, supports and resistances, like if it is not obviously bouncing between the floor and the ceiling, which you will not know. How would you know if it is going to do that? Well, One of the ways to tell is that if it's bounced back about 2 or 3 times, you see like 1, 2, 3, uh, and then from there, when it makes like two bottoms and 2 tops, you know it's gonna stay there for a while. 2 bottoms, 2 tops. So 2 bottoms, 2 tops. Um, and apart from that, let's say if it's going down but not making is not making any tops and bottoms, it may make 1 bottom and 1 top and continue to drop, then that's not considered a range. Okay, a range is not a range until it's defined as one by 2 bottoms and 2 tops, or 2 tops and 2 bottoms, whatever you look at it. This over here is when you would really want to trade a downtrend. Plus, I also mentioned in my video as well that, and this applies more for Forex guys, because in binary, we can't really just hold the position. We have to either, we have to, in binary, if it goes nowhere, we make nothing. But in Forex, if it doesn't if it doesn't go anywhere, you simply exit the trade for a small loss or even a break even. So what would I do if this scenario where you see it's all coming down? Okay, let's say if this was binary, I may look at a MA cross, and then I will start to do, when I see a faster MA crossing a slower one, I may see that this is an opportunity to go short in this direction, right? To go a put trade in this downward direction. But let's say if I was trading Forex, remember one thing from the video that I said is that once we get 2 peaks broken, we have a downtrend. Okay, so if we get 2 peaks broken, where would that first peak be? So this is the top of the previous movement, right? So this is our first peak, okay, first bottom peak, and our second bottom peak is this, okay, and then it breaks that. I'll see if it retraces. If it does, great. If it doesn't, I'm fine. But if it does retrace, I would probably make my entry somewhere around here, and then I would do a stop loss just a little bit above here, like that. So so this is the, okay, a bit too many lines, you think. Let me get rid of some lines. Okay, so if I was to do it in terms of, like spotting peaks, right? Okay, this is my first peak. That is my second peak. Oh, I really should be getting rid of this line instead. So, all right. Now I would be taking my entry at this spot right there for a put trade, and my stop loss would be, just just on the previous peak. Okay, a little bit above the previous peak, just about there. And then, what I would do from that point on is that I would just simply take a risk reward of 2 to 1. So if this is my stop, so this is my entry, this is my stop, that is about 6.3 pips. I'll have a TP about 12 pips down, and it would be thereabouts. So I'm going to move this chart all the way, and you see it does actually go down by that much. Once again, 6.3 pips, and then we have 12.6 pips, nicely that way, and I'm out of the trade right over here. Okay, it's a great thing that you can try out. Go check it out on your XM, where you can, if you're totally fresh with Forex, go get yours and try it out with the cash you have there on that account. If not, you get most free. Welcome to try it on your own account. But in the meantime, like I said, this setup wouldn't be a working one on binary, because if you went in here, you would just be stuck. And at the same time, like if it was a Forex, some people don't like to hold a trade for too long. Sometimes, if you see that it just goes nowhere for a period of time, maybe after a few bars is not moving, you might just even exit and re-enter when it starts to do a double break of the low. Okay, so that's not bad as well. It just worsens your risk reward, and but that's also possible. So there's some possibilities and ways to trade. So I just mentioned understand that the market is basically a free rising, free falling one. You can easily tell by going out the time frames, but uh, from time to time, the market will hop into certain zones. So, like I said, the market is free falling, free rising, but at some points there will be a ceiling. Let's say if it comes from out of the window to right to the bottom, and then goes up to someone's window and starts jumping between floor and ceiling. And how do we know? Once again, two tops, one, two bottoms, two bottoms, and right a moment out there. So we know this is a consolidation, but as soon as it finds out that, it just hops out on the other side. That's basically it. All right. So I hope you found this useful video. I hope you found this video useful. My name is Julian. I actually lead a trading group that does daily webinars on binary options trading. In the very near future, I will also be releasing many Forex videos because I feel that it's just kind of nostalgic to get back into Forex again. And as a matter of fact, there will be weeks in the market just like this where it is probably more lucrative to trade Forex. And on other weeks when the market is ranging, remember, ranging is binary, trending is Forex. So I like to do ranging markets on binary because there's not very much movement. I can capitalize the lack of movement. But in Forex, I definitely want to let my profits run. So that's how I make the best of both worlds. I'll be explaining more about that. So subscribe if you find this video useful. You get my latest updates as soon as they come out. Bye everyone. This is Julian Wong.